It is 8:12 a.m. Pacific Daylight Time. It's the 24th day of July 2026. This is episode 1359. Bitcoin and BitMEX already getting sued. That's going to be our lead story for the day. But we got more here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. Goldman Sachs says they're backing the Clarity Act, which is surprising to me considering that, well, two things. That means there's something in the Clarity Act that we definitely don't want that we haven't really seen yet. And two, it seems like a flip-flop. Yeah, because if I remember right, Goldman Sachs was one of the people lobbying against Clarity Act because God forbid that they lose their deposits because they can't compete on the open market with banks that may be getting into stablecoin collection and deposits and being able to offer, better interest rate. Who knows? We'll find out. Corey Clipston from Swan is starting a row with Jack Mallers and has said some don't think that he didn't say anything terrible. He's just he's really questioning the entire thing of Jack Mallers leaving 21, why he was CEO in the first place. And it's pretty pointed. It's pretty pointed. Then on to India. They don't seem to like Bitchat. Yeah, they're bitching at GitHub to take down Bitchat. We'll tell you why. Brazilian farmers tokenizing cattle. Yes, they're tokenizing animals. Put cows on the blockchain by all means. And then Kazakhstan will be next. This is all second part of the show. National Crypto Reserve funded by the Bitcoin miners? Could be. Poolin is going to file for bankruptcy. Bitcoin treasury companies are, there's a CoinDesk article here by James Van Straten that's sort of talking about where we are with Bitcoin treasury companies. He sort of kind of put some things together, and I think it's important that we stay on top of Bitcoin treasury companies, even if we don't like them, simply because, it's the world we live in, and we're watching collapses occur in the smaller Bitcoin treasury company ecosystem. And then DeepSeek Liang Wenfeng, the CEO of DeepSeek, who rarely is seen in public, much less recorded in public, actually talking about artificial intelligence and DeepSeek and some other things, had a 4-hour investor meeting. I'll bring you the highlights of what he said at the very end of the show. But first, BitMEX is hit with a 623 Bitcoin lawsuit on the very day that it announces its shutdown. Ezra Reguera is writing for Cointelegraph, kicking us off. BitMEX is facing a class action lawsuit, accusing the crypto derivatives platform of fraudulently engineering customer liquidations to seize traders' Bitcoin collateral. On Thursday, BKX Services Incorporated and David Namdar filed the complaint in the U.S. District Court, of course, in southern New York. The plaintiffs allege they lost a combined 622.6 BTC through forced liquidations on BitMEX, with BKX claiming losses of at least 305 Bitcoin and Namdar alleging losses exceeding 316. The lawsuit revives long-running allegations about the platform's internal trading operations and liquidation engine, and comes just as the exchange is preparing to close in September. Quote, BitMEX deliberately developed a system that profited from liquidations, the plaintiffs allege. The complaint claimed that an internal trading desk had access to private customer information and could continue trading during server freezes that prevented ordinary users from accessing or closing their positions. Quote, BitMEX has had many such claims against the platform in our history, and has successfully dealt with each and every one. BitMEX spokesperson told Cointelegraph, quote, "This is yet another opportunistic claim with no basis. We look forward to vigorously defending ourselves again," end quote. According to the filing, BitMEX allowed customers to use leverage of up to 100 times their collateral, then automatically liquidated positions while collateral was still allegedly worth twice the losses that were incurred. The remaining Bitcoin was placed into the platform's insurance fund, allowing BitMEX to profit from forced liquidations, according to the plaintiffs. The plaintiffs are also seeking the return of the allegedly withheld Bitcoin as well as compensatory and punitive damages. They aim to represent United States customers who purchased Bitcoin swap products in transactions dating back to July 23, 2018. The complaint also pointed to a class action suit filed in 2020 by Brett Messia and other traders alleging similar conduct. Now, that case, which brought claims under the Commodity Exchange Act, was voluntarily dismissed without prejudice on June 30th, 2025. The proposed class action lawsuit was filed on the very same day BitMEX announced that it would close after 11 years of operation. BitMEX said it would stop providing services September the 23rd after a strategic review by its owner, HDR Global Trading. It stopped accepting new registration and plans to prevent users from opening new positions starting August the 26th. So that's the entirety of that article right there. Why now? I think that what's going on here is that given that they were announcing, that BitMEX was announcing that they were going to close, that the plaintiffs in this particular case were probably already planning on suing BitMEX and just didn't expect them to say, hey, we're shutting down. And no, I do not think that this lawsuit has anything to do with BitMEX shutting down. Like even if they were forewarned, 600 and change Bitcoin. I mean, it's a lot of money to us, the plebs, but to something like BitMEX, that's not that big of a deal. But it would seem that everything on the plaintiff's timeline would have, must have been accelerated so that they could get this shit in under the wire so they could go ahead and try to recoup their costs. If what they say is correct and it can be proven in court, then BitMEX will have to pay up. However, like BitMEX has said, they've seen this dog and pony show before, and they have pretty much defended themselves very well in court. So who knows where this goes, but it is what it is. Goldman Sachs backs the Clarity Act, splitting Wall Street over crypto rules, Bitcoin Magazine. Goldman Sachs chairman and CEO David Solomon has thrown his support behind the Clarity Act. Quote, "I'm very supportive of moving the Clarity Act forward so we can get some market structure in place and start to move the innovation process along," he said. He called the bill imperfect and said its value lies in creating a level playing field to enhance market stability and allow these markets to develop appropriately. Solomon spoke after Senate Republicans began circulating new text of the bill this week ahead of a possible floor vote. His endorsement lands against a wave of opposition from other bankers, chief among them JP Morgan chief Jamie Dimon, who declared war on the bill, and in May, upbraided Coinbase CEO Brian Armstrong over the industry's lobbying. The split runs along business lines. The fight centers on a provision that governs stablecoin yield, the rewards crypto platforms can pay users who hold dollar-pegged tokens. Commercial and community banks warn the language would pull deposits out of insured accounts and cut into local lending. 6 of the largest banking trade groups, including the American Bankers Association, published a statement on Wednesday. that called the Clarity Act and its provisions a risk to the local lending that drives economic activity in the U.S. The ABA has pushed to strip the yield language, and labor unions have joined the opposition. Although God only knows why labor unions would be interested in token yields and or why they would be interested in not having token yields. I mean, I don't like the word yield any more than anybody else does, but why labor unions? And whatever. I don't know, man. I smell a rat. That's what I smell. Investment banks like Goldman, less reliant on consumer deposits, have trained their focus on other parts of the bill. Solomon pointed to language that would let regulated institutions that have been on the sidelines participate more actively. Goldman Sachs' position is that we believe strongly that we need one system where everyone can participate. The stance fits Goldman's own turn toward the asset. The bank has disclosed a $1.1 billion position in a spot Bitcoin ETF, called the funds an astonishing success, and Solomon has revealed a small personal Bitcoin holding. The bill's stablecoin section holds the Tillis also Brooks compromise, which bars passive yields on idle balances while it does permit narrow activity-based rewards. A line the banking lobby says just leaves too much room. The measure has moved through bipartisan talks for months. The House passed its version in July 2025, and the Senate Banking Committee advanced its text in a 15-9 vote back in May. So we've got some flip-flopping going on, and it kind of looks like, Jamie Dimon himself hasn't really come all the way to being able to say that he completely backs the Clarity Act. In fact, I want to read this part one more time. Solomon spoke after Senate Republicans began circulating new text of the bill this week ahead of a possible floor vote. His endorsement, Mr. Solomon's endorsement, lands against a wave of opposition from other bankers, chief among them J.P. Morgan chief Jamie Dimon, who declared war on the bill. So Jamie Dimon over at J.P. Morgan hates this thing because he just generally hates anything having to do with Bitcoin or something that even smells like Bitcoin. And even though stablecoins have nothing to do with Bitcoin themselves, somebody like Jamie Dimon does not make that distinction. In fact, Jamie Dimon would be against this, not really as much as yields, as much as it's the only attack vector he really has against the real elephant in the room for him and all his banker friends, which is Bitcoin itself. He's tried to attack Bitcoin, but it's kind of unassailable for various reasons that, we've talked about on the show before. I won't get into. So someone like Jamie Dimon is looking for any chink in any armor that may have anything to do with getting to Bitcoin at its core. And it's just not going to work. Now, will Clarity Act go through? I don't know. Half of me says I really want the Clarity Act to go through, but that's just a selfish standpoint. Because if it doesn't go through, we're going to see continued price pressure on Bitcoin, at least in the short term. And I'm tired, boss. I'm tired. Can't help it. But someone else is tired too. And that would be the Swan CEO, claiming 21 serves Tether's U.S. political interest, and he calls Maller's role ceremonial. This is R.T. Watson writing for The Block. Swan Bitcoin CEO Corey Clipston sharply criticized stablecoin giant Tether and Jack Mallers, who recently stepped down as CEO of 21 Capital. Although Clipston said Tether had obfuscated it to some degree, he argued that the company effectively controls 21, a publicly traded U.S.-based Bitcoin treasury company. Clipston also alleged that 21 is being used as a vehicle to advance Tether's interest in the United States. Quote, it's kind of their U.S. entry for them to do U.S. things and, line pockets where needed for political reasons, he said during an interview on the Starting Block podcast on Thursday. The Swan Bitcoin CEO did not offer any evidence to support his claim about Tether using 21 for political reasons, and Tether did not immediately respond to a request for a comment. USDT, the world's largest stablecoin, is primarily oriented towards market outside the United States. Tether restricts most U.S. persons from directly using its platform, although USDT can still circulate through secondary markets. The company has, nevertheless, been working to expand its American footprint. Besides launching USAT, a stablecoin specifically designed for the United States market, Tether backed the creation of 21, which trades on the New York Stock Exchange under the ticker symbol XXI. And last year, 21 was created through a SPAC merger with Cantor Equity Partners. It launched with $3.6 billion in Bitcoin on its balance sheet at the time, making it the third largest holder of Bitcoin among publicly traded companies. Strike founder Jack Mallers was named CEO of 21. Mallers then exited 21 this week as his company Strike also dropped out of a potential merger. Tether Investments, 21's majority shareholder, proposed in April a two-stage merger that would have folded Strike into 21, which would then merge with Bitcoin miner Electron Energy. Quote, I've decided to step down as CEO of 21. My life's work remains Bitcoin. My company is Strike. The work continues. And that's a direct quote from Jack Mallers. Clipston characterized Mallers' position at the company as ceremonial, saying the Strike founder's role was primarily to promote 21's shares. Quote, he did his job, which was to shill the stock last April, which he did very aggressively, added Clipston, who also said he doesn't believe it was Mallers' decision to leave 21. And of course, Jack Mallers didn't immediately respond to a request for comment, and he probably won't. If I was Jack, I wouldn't. And it's not because I think that Corey is some kind of dickhead for saying this. Corey's always been really outspoken about these types of things. And he really just doesn't pull any punches. If he smells a rat, he basically says, I smell a rat. And if he seems to think that Jack Mallers is a rat, well, there may be something there. Again, I go back to my standpoint. I like Jack Mallers. I always have. I mean, he's an impressive cat, but look where he comes from. You know, look who his dad is. Especially look into, who his grandfather is. You're talking about, if I remember correctly, his grandfather, along with two or three other people, basically built the Chicago Board of Trade. I think that's what it is, or I think it's the CBOT. So the Mallers family has been knee deep in legacy financial shit since before Jack was born. He's going to act accordingly. That's how if you were brought up around these people, you're going to be imprinted with the way these people act, how they think, what they do, how they get out of shit, how they get into shit. I'm like, it's a nature versus nurture thing. So it doesn't surprise me that Jack Mallers would be basically pulling old school financial legacy bullshit out of his pocket. I mean, if that's what you got, that's what you got. Do I necessarily think that Jack Mallers is dirty? No, I really don't. Is he skating on thin ice with his reputation? Yeah. Honestly, though, and maybe Corey's right. Maybe he was asked to step down. But I always had the feeling that Jack Mallers really didn't want to be CEO of 21. So here's what I think. I think that when they approached Jack and said, hey, look, when Tether approached Jack and said, hey, here's what we want to do. Jack was like, okay, I'll do that shit and I'll shill your fucking stock for you. I want $140 million on exit and I don't want to do this shit for any longer than a year. And Tether said, okay. Do I have proof? No. It is just simply a gut feeling. There's just, when you hear somebody talk and you read what they write and you sort of like kind of take note of their actions across the course of of timescales like that I've been, aware of Jack Mallers' existence in the Bitcoin space, which has been a very long time. I've known about Jack Mallers since before Strike, when the company he was working on was called Zap, which is probably how we named Zaps in Nostr. The minute that they announced that he was going to be the CEO of 21 Capital, the first thing I said is, that doesn't sound like something Jack would do. I don't think he was forced into doing it. I think they begged him to do it, and they were going to offer him a ridiculously high compensation package to do it. And his term was up, and he said, "Hey, I said a year's up. I'm gone. I want my $140 million like you promised." And it's not like Tether can't, write that check and like probably 100 more like it. Tether's got a lot of money in the bank. So the only thing that I've got if I were to have a problem with any of this, it's just how abrasive Corey Clipston can actually get. But I got to hand it to him, man. I mean, I got to hand it to him. He's just pulling no punches. Respect, dude. Are you dirty? Do you feel dirty now? Well, go to my friend Soap Miner at soapminer.com. That's soapminer.com. Get yourself some handmade tallow soap. Get yourself clean. But, don't use shit with parabens in it. Use actual real soap, the way soap your great-grandmother and grandfather probably made in their backyard, most likely during the Depression. Cedarwood tallow soap bars go for $8, but you're going to buy it in Bitcoin, because this is the Circle P. It's where I bring plebs like Soap Miner with goods and services to other plebs that are just like you who want to buy those goods and services. Participate in the Bitcoin economy, the circular Bitcoin economy. Because if you're not selling your stuff in Bitcoin, you're not in the Circle P. It is a requirement that you sell your stuff for Bitcoin. You don't only have to sell it for Bitcoin. If you also take fiat, I'm not going to blink. You just have to accept Bitcoin for your goods and services here at the Circle P, where Soap Miner is the vendor of the day. Cedarwood tallow soap, rosemary tallow soap. All of his soap is tallow. It's 100% grass-fed beef tallow. That's the fat that you have to start with when you're making any kind of soap. He also uses lye, which is the other side of the soap equation, and of course, distilled water. That is his basic structure. That is his basic bar of soap. In fact, you can actually get that. It's called rough cut tallow. It doesn't have anything but 100% grass-fed tallow, 100% lye, and 100% distilled water. There's nothing. There's no scents. There's no colored sands. There's no nothing, right? But all of his soap is the best soap I've ever used. I not only wash my hands with it, I use it as bar soap in the shower. I also wash my hair with it. And you might go, oh my God, I had to wash my hair with a bar of soap when I was camping and it screwed up my hair. It's because you're using fucking Irish Spring, bro. Or Dove Bar, which is just as bad. In fact, go to any Walmart, pick any bar of soap. I don't care how much you pay for it, off the shelf at a Walmart. Take it home and wash your hair with it, and it'll jack it up. Not so with Soap Miner. In fact, it not only cleans everything in your head, every hair on your head, it's like a conditioner because of the fat. It conditions your hair. I love this stuff. I also shave with it. It's amazing. It is an amazing product. Soapminer.com. That's soapminer.com. Make sure you use code Bitcoin and in the coupon code, and you will get 10% off at soapminer.com. Get clean with Soap Miner at soapminer.com. India is pissed off at Jack Dorsey. They don't like his stuff. In fact, they don't like Bitchat because they have ordered GitHub to take down Bitchat amid protests. Oh, Stephen Graves, Decrypt.co. India's cybercrime agency has ordered GitHub to take down the code for Bitchat. a decentralized messaging app built by Jack Dorsey on Nostr. It is a Nostr protocol, giving the Microsoft-owned platform 3 hours to comply. You have 3 hours. Okay, we're India, and we're calling a United States company that basically, owns all of our computers here in India, and you have 3 hours to comply with our demand. Microsoft will probably do it, but still, it's just like, Microsoft at that point really needs to say, go fuck yourself. I hate to say it that way, but dude, sorry for you, India. You live in a brave new world. You better get used to it. And it's going to get worse, as we'll see later on in the show. The notice issued on Thursday by the Indian Cybercrime Coordination Center under the Ministry of Home Affairs named 3 repositories under the permissionless tech account, the main Bitchat project, its Android build, and the Android release page, and invoked several sections of several legal acts that I'm not going to read the names of. It told GitHub to remove and disable access to the code without vitiating any evidence. I've never seen this word. Vitiating. Without the hell does vitiating mean? Hold on. I've never heard of it. Vitiating is the action of spoiling, weakening, or making something legally void. Don't know how that fits here, but okay, whatever. Bitchat routes messages directly between nearby phones over a Bluetooth mesh network with no internet, no servers, no phone numbers, no accounts, a design the I4C said significantly impedes lawful interception, attribution, and investigation. The agency warned the app could be exploited during, quote, public disorder, riots, terrorism, organized crime, or internet shutdowns, and cited provisions of the IT Act and the Bharatiya Nyaya Sanhita, India's criminal code. I can't pronounce any of that. Sorry if I offended anybody. The order lands as India wrestles with a youth-led movement over exam paper leaks, which this is the first time hearing about it. Tens of thousands have rallied in Delhi behind the satirically named Cockroach Junta Party, and Prime Minister Narendra Modi has vowed fast-track courts for officials accused of rigging exams. With mobile internet cut around Parliament and the Jantir Mantar protest site, demonstrators have turned to offline tools like Bitchat. Dorsey, the former Twitter chief and Block CEO, posted the notice with a terse line that the, quote, government of India does not like technologies like Bitchat, while the Bitchat community account said that, quote, governments that fear people talking without permission will always go after the tools that make it possible, end quote. The Internet Freedom Foundation condemned the order as unconstitutional and authoritarian, arguing it named no unlawful content and bypassed India's blocking procedures. India is not the first state to move against the app. China ordered it pulled from Apple's App Store in April, echoing Beijing's 2023 ban on Dorsey's Nostr-based DOMIS. Wait a minute, hold on. Oh, no, that's incorrect. Jack Dorsey did not make the DOMIS Nostr client. That's JB55, right? Dorsey endorsed it, but he did not build it. So understand, DOMIS is a Nostr client. It has nothing to do with Bitchat, but it was not built by Jack Dorsey. Bitchat was built by Jack Dorsey. JB55 is the guy behind DOMIS. Anyway, removing an app from a store limits distribution, while removing the source code tries to kill a project outright, though open source code can be freely copied and mirrored. Indeed, just hours after India's crackdown, Bitchat repos were mirrored. Hold on for a second. I got some funkiness going on in the rendering of my news story. It's not letting me read it. Okay, here we go. Indeed, Just hours after India's crackdown, Bitchat repos were mirrored to decentralized code collaboration platform GitLab, and days earlier, Dorsey's block launched Buzz, a decentralized platform pitched as a way to cut its own reliance on GitHub. Microsoft has not said whether it met the 3-hour deadline or not. I hope they didn't. I hope the guys over at Microsoft told India to go fuck themselves. Because GitHub is owned by Microsoft, and Microsoft is a United States-based company. They don't have to do anything if they don't want to. If they do, it's, they don't want some kind of legal injunction in India against Microsoft products, because that would hurt the bottom line of Microsoft. But at one point or another, it's time for people to take a stand and not let, in this particular case, it's not let other countries in the world dictate terms. If you're strong enough and have enough spine, you can basically say, no, bitch, I dictate the terms. If you don't like it, then shut down all of your country and move to Linux or Apple or whatever. We're not budging. We're not having GitHub take down any repositories because you are too authoritarian to understand that if you go down this road far enough, you're going to have physical violence in the fucking streets. Because people have been pushed to their goddamn limits here on the planet Earth. The citizenry of this earth has been pushed and stepped on and beaten and broken and stolen from for so long. And there's only so long people will take bullshit before they absolutely crack right down the middle. And people that you thought would never raise a hand to any other human being on the face of the planet suddenly turn into fucking banshees. You watch it happen. Just watch it happen. This is one of the reasons why I think Microsoft should say, no, we're not doing anything. And they should say the same thing to Pakistan. And they should say the same thing to Australia. And they should, if it is a country that is not the United States government, they should basically be saying, no. If you want us to take something down to help your leadership out, not have to deal with the people that you've pissed off, you can go pound sand. Let's run the numbers. CNBC Futures and Commodities, where we're witnessing something striking going on in Iran. Oil has fallen. Oh my God, Brent North Sea is down almost 5 percentage points, back below $100 to 95.79. West Texas Intermediate down 4 1/3 to $88.20. What could possibly be happening? Oh. There's a report that there's a Pakistani push for brand spanking new Iran-U.S. peace talks. When is everybody going to learn? When is everybody going to learn? This is the easy, let's say this. Let's cut out all the potential, possibilities, the 4D chess that's going on in the background, that could possibly be going on in the background that will usher in yet another brave new world with, all these people talking in these closed channels. Maybe, just maybe, the entire Middle East and a couple of other countries are banding together to simply cause volatility in markets that they can trade against. What if it was just that? What if we come to find out maybe decades from now that when all the dust is settled and we have a couple of clean decades of nothing going on, God can only hope, that we look back and we find enough information to say, yeah, there was no 4D chess going on. This wasn't about Trump, needing to take Iran because apparently there's, really pretty coastlines to build Trump hotels on. No, it had nothing to do with any of that shit, which is also, by the way, not 4D chess. Just to swing the markets so that we can buy futures, we can go long, we can go short, depending on which way the wind is blowing. And every time Pakistan says, hey, we're mediating talks, you get a 5% drop in West Texas crude oil. You can trade that shit all day long because the volatility is known. I honestly think it's kind of this whole thing has been way more simple than people are making it out to believe. But above all of that, bullshit. I call bullshit. This is not going to work. How many of these peace deals have we tried to broker? And how many of them have been involving Pakistan? What, like all of them? Why Pakistan? It's my question. I don't have an answer for it. Natural gas is up 1/10 of a point to $2.91 a thousand cubic feet. Gasoline is down 3 1/4 to $3.38 a gallon. And Murban crude is down almost 10 full points to $97.04. Metals are mixed. Palladium is down, but only slightly. Gold is up 2/3 of a point to 4,081. Platinum is down 0.17. Silver is up almost 2 points, $59.20 an ounce, and copper is up 1/3. Ag is fully mixed today. Biggest winner is chocolate, 1.8% to the upside. Biggest loser is wheat, 3.5% to the downside. Live cattle up 3/4 of a point. Lean hogs up just over a half, and feeder cattle up 3/4 of a point as well. S&P is up 2/3 of a point, but the NASDAQ is down 1/5 of a point. The Dow is up 0.78%, and the S&P Mini is up 1 full percent. And Bitcoin is struggling today because God only knows why. $64,070. That brings us to a $1.29 trillion market cap, and we can only get 15.7 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,060,510.5 of. Fees per block, 0.02 Bitcoin taken in fees on a per block basis. There's about 45 blocks carrying 89,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Lows will get you in at 1. Hash rate has risen back above 900 to 908 exahashes per second. And I'll just leave it at that. Reminder, if you want to support the show, the best place to go for fiat donations is the Bitcoin and podcast, where you can buy a $5 a month tier, or you can just plop down $50, get it for the whole year. Honestly, to be upfront and transparent, you can get all of it for free. What do you get? Well, I tried to distill an entire episode down into, essentially a nice written article that kind of just touches on what I talked about during the episode of that particular day. There's a link to the episode itself. The Circle P vendor of the day is in there with links to be able to buy their products, which I highly recommend that you do. And I put together some nice art. Yes, I use AI to do it, but I do it in a way that I think actually produces a decent product for somebody like me who can't draw their way out of a wet paper bag. You do not want me taking snapshots of like oil paintings that I might come up with, or watercolors, or me on, doing something in Photoshop. It just doesn't work all that well for me. My daughter, on the other hand, is really good at it. I am not, but I've figured out a couple of ways to have some, what I think is actually decent art for something that's going to be produced every day. But mainly the website is for you to be able to show your support in fiat terms. If you want to show your support in terms of actual money, Bitcoin, you can do that through any Podcasting 2.0 application. You can get all of your old podcasts that you get on your legacy podcast apps, but in a brand new way. You can get them all on Podcasting 2.0. Almost every single every single Podcasting 2.0 app that I know of has a Bitcoin wallet. And most of those are Lightning Network enabled. And you can stream Satoshis. You can stream me like 10 sats for every minute that you're listening to the show. And when you stop listening to the show, you stop streaming sats. It's also that lets me know how many people are actually listening at any given time, because I can see it in my Lightning network because all Satoshis go directly to my Lightning node. And you can boost me. And I've got a pretty big boost over here from yesterday's show named End of an Era, BitMEX. Jay, thank you for the 15,000 Satoshis. It's a way that Jay showed me support. And he says in the note attached, thank you, sir. By the way, Saylor said that thing about paranoid crypto anarchists back in 2024, not recently. It was egregious then, and it's still egregious today. As for him talking way too much, I agree. The guy fills hours and hours of his time with his own voice. It's a wonder he gets anything done, unless what he needs to get done is done purely by running his mouth. Also, I like the renewed push to get more boosts and support for the show. Keep it up and get mean. I've seen another guy complain that 200,000 sats on a show was kind of low. You can definitely get away with it. I'm always playing catch up with these, so I end up batching my boost amounts based on how many it's been since the last one. Thank you, Jay. I appreciate that. I really do. I also appreciate the talk about, being able to say with a straight face that 200,000 Satoshis is too low of a donation. I need to start punching way above my weight, I think is what Jay is trying to tell me. Kaz Poolin with 1021 says, thanks for your work. Bless JCD. And he's referring to John C. Dvorak, recently passed away July the 20th this year, which was just a couple, 4 days ago. He was the co-host of No Agenda Show, and he was also the co-host of, he did a show with a guy named Horowitz. I can't remember the name of that show. Anyway, he was a funny guy, and I never met him. I never knew him. I never talked to him even on email or chat or anything. But man, yesterday's No Agenda Show, which was entitled In the Morning, if you're a No Agenda Show listener, you know not only the show, but how morning was spelled. I got to say, Adam was on the verge. His first 10 minutes, he was essentially reading an obituary, his own obituary that he wrote for John C. Dvorak, who he'd been friends with and partners with for like 20 years. Losing a friend of 20 years the day after you last spoke with him. Got to be frightening. But he was on the verge of tears. I mean, I've been listening to No Agenda for a long time, and I've been listening to Adam Curry speak for longer than that. And I can tell you, man, just listening to him talk, you could tell he was fighting tooth and nail not to start bawling like a little girl. And I don't blame him. Losing a friend after 20 years, especially like right after you talked, because they did a show the day before, and he died the very next day. Hats off to Adam Curry for being able to keep it together as a professional during that particular broadcast. And my heart goes out to everybody who really did know John C. Dvorak and counted him as a friend, because I didn't even know him, and I damn near cried. Cycros with 500 sats says, Boston BitDevs is coming up July the 30th at MIT Building 4. Be sure to RSVP through bostonbitdevs.org. That's bostonbitdevs.org. I will try to put this in the show notes. In fact, I'm going to do that right now so that I don't forget. I'll put it right here with the circle P so that I can remember it later. Hold on. Just bear with me. There we go. Okay. He says, or with the link if David wants to put it in the notes. Cycros, it will be in the show notes today. He gives me 500 sats for saying that. Again, Boston BitDevs, July 30th, MIT Building 4. Go to bostonbitdevs.org. That's bostonbitdevs.org to RSVP. Do it, because July 30th is coming up pretty quick, man. So just saying. And he also says, come with questions. All right, Jason Hyde with 250 says, here are some sats to thank you for the show. Thank you. Nick Dose with 248 sats says, cheers. Right back at you. Noster Gang with 101 says, rip JCD. Again, he left us way too soon, even though he was 80 years old. That's the weather report. Welcome to part 2 of the news that you can use, where Brazilian farmers are tokenizing cows to get farm loans, and it's working. Jose Antonio Lanz is writing this one for decrypt.co. 10 cows, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 cows on a dairy farm in Paraná, Brazil, just became the first livestock collateral formally registered on the country's stock exchange. The deal, backed by blockchain-tracked animals wearing AI-powered sensor collars, is a real-world test of whether the crypto world's obsession with tokenizing physical assets can actually help farmers who are running out of options. Fazenda Enigo Velho in Imbituva used 10 cows valued at roughly $23,310 US to secure a CPRF, a Cédula de Produto Rural Financeira, which is Brazil's rural credit certificate that lets farmers borrow against livestock or crops. It's worth around $19,420 US from BMP, a central bank authorized direct credit company. BMP then sold those credit rights to Target FDIC, a fund that purchases and monetizes receivables, which registered the whole thing on B3, Brazil's main stock exchange. The cows were tokenized. Each animal receives a unique encrypted digital ID generated from health, behavioral, and location data captured by smart collars built by CowMed, an agricultural tech startup that monitors dairy herds using artificial intelligence. CowMed's system cryptographically hashes those data points into a tamper-resistant identifier tied directly to the credit contract. No farm inspection is required. Banks routinely discount livestock as collateral by as much as 60%. A cow worth like $2,380 on paper can end up valued at $1,600 for loan purposes because lenders have no reliable way to track an animal's condition or even confirm if it's still alive. Quote, with monitoring, that uncertainty is eliminated, Humberto Brenner, Target FDIC director, told Globo Rural. He also pointed to what's driving demand for the model. Quote, banks will increasingly demand real collateral and new information. End quote. Brazil's farming backdrop sharpens the stakes. Agribusiness bankruptcy protection requests reached 1,990 in 2025. That's nearly 4 times the over 500 filed in 2023. High interest rates, tumbling commodity prices, and climate shocks have combined into a slow-motion credit emergency for the agricultural sector. CalMed CEO Thiago Martins framed the operation as a direct response to that reality. Quote, we took the cow, a real and tangible asset, and transformed it into a digital asset backed by a unique code monitored in real time, he told CNN Brazil. Quote, this digitalization allows formal registration on B3 as a financial security. The process gives the farmer an advantageous opportunity to get financing, opening a new collateral alternative at a time of strong credit restrictions in agribusiness, end quote. On what the model offers producers, quote, the operation allows the farmer to access more attractive credit in terms of cost and limit. We want to connect the farmer and the financial institution with a new alternative. The deal fits into the broader RWA tokenization wave. That's real world assets. The practice of converting physical assets into digital tokens usable as financial instruments, which has already hit over $10 billion in total value locked across DeFi platforms via tokenized US treasuries and real estate. CalMed's version just happens to come with hooves. The company currently monitors 100,000 cows across 1,200 farms in Brazil, the US, Canada, Uruguay, Paraguay, and Bolivia, with a combined estimated value of $395.4 million US. Martins projects 20% of that herd, about $77.6 million, could be pledged as tokenized collateral within 2 years. 4 more Brazilian farmers are already under evaluation by Target FIDC, and the companies are targeting around $971,000 US in credit through this model by the end of this year, 2026. That's the end of the article, but oh shit. That throws a big old wrench into the monkey works. And I say that because of this. A few years back, when I was doing this show and I was still living in Canyon, Texas, and that's been over 5 years, I was bemoaning the whole bananas on the blockchain issue because it's stupid. You can't really track it. You know, it's like and they were saying things like this. They weren't doing it for loans. They were doing it so that you could track where your banana came from. I should care, but I kind of don't care. You know, and I definitely don't care if I can track that the banana came from a place that I knew it was coming from anyway, probably Ecuador or something like that. It's certainly not grown in the United States, and if there is a banana plantation in the US, it's pretty small and doesn't really service the United States needs for bananas. Just saying. So I don't really care. But you couldn't really track it. It's not like you put a chip on every single individual banana in every single bunch that you're shipping over so that RFID scanners can actually say, yep, that's the same banana that came from Ecuador. I can tell because that shit's not work. That doesn't work. No one was going to do that. That's why I always said that this is complete and utter bullshit. However, we've got this going on. Now, you can't put a collar around a banana, but on a high stakes animal like a cow, which are really pricey right now. If you haven't priced whole cows that are live, they're really pricey. They cost a lot of money. Bulls, like good bulls with good genetics, you're talking like $5,000 for one of them. You know, a regular cow, like $2,600. The cattle prices are fucking insane. So if you put a collar around it and can say, yep, it's got a heartbeat, I can tell its temperature, and I know where in the world it actually is, now I can hash all that information together and come up with a unique identifier that I can put as a token on a stock exchange. I should be reeling at this, but I'm a little bit more fascinated as to where it goes. Do I think this is good? No. Why? Because at the end of the day, CalMed, the company behind this, is selling the ranchers' data to anyone who has enough money to buy it. I believe that the collaring and these collars, the collars that CalMed is talking about, they are probably more about monitoring the health of the animal than anything else. But there are other collars that you can use as wireless fences that you can literally get the cattle to move in a herd to other places on the land, right? That means that you can do things like rotational grazing, and you don't have to go out and move the cattle yourself, although I think people should be around animals because the animals should also be around humans so that they're used to them. You know, they're domesticated animals. But, you know, I get it. Being able to have a map, like a GPS-based map, and just basically draw out where you want the cattle to move and when you want them to move. And they've got all these collars. This is actually really cool technology, but only if that data is not being sent to a third party. And all the companies in the United States that make these collars, whether they're just monitoring collars or wireless fencing collars, they all have a copy of your data, and you have to rent the shit from them. You can't buy it. It's a subscription, which is why I really hope somebody out there within the sound of my voice that likes to build electronic gear will build for ranchers an open source set of software tools that can be installed in an open set framework of physical collars that can be built. The casing may be 3D printed. Maybe it holds a Raspberry Pi inside with a lithium battery, but be able to build it so that nobody owns the data and nobody owns the material gear, like the collar itself, but the rancher. And if they want to share the data with their other rancher friends, then that's fine. That's for them to decide. But I hate the way that this is going. But I can't help but be kind of fascinated of the underlying issue. I know the animal is alive. I know what its body temperature is. I may even know what its blood pressure is. I can sense, would be able to sense that it has a fever, right? And if I'm backing a loan against that animal, well, hell, I do want to know that shit. I really would want to know that. Like if a hurricane blew through and killed all the cattle, these 10 cows, right? The banker would automatically know and say, you've lost all your collateral. What else you got? I mean, I'm not saying that I'm like all raw bankers, but if you take a business loan, and your collateral vaporizes, you're going to get a call from your banker. It's just, that's the way this shit works. They're going to want to know what other collateral you got. This is the only time that you will ever hear me say this kind of makes sense in the context of bananas on the blockchain. You were never going to you can't even put a barrel of oil on the blockchain and be able to tell where it came from or what conditions it's in. But chickens, ducks, cattle, sheep, alpacas, all of that stuff. This actually makes sense. This isn't stupid, is what I'm getting at. Bananas on the blockchain, oil on the blockchain, that's fucking stupid. But livestock? Something with a heartbeat? I know, I'm scathingly close to Orwellian style thought processes, but I'm fascinated, and it's good to be fascinated with something like this so that you can crawl into it and pull it apart. No matter what I find when I start crawling deeper into this particular rabbit hole, one thing remains the same. Ranchers need open source versions of not only their tractors, but any collaring technology for their livestock so that they and they alone own that collaring technology, not the technology, but the actual collars, right? And the software would be open source, so everybody owns it. But the collars and the data remain in the purview of the rancher themselves. That's what needs to happen. Moving on to Kazakhstan. They have moved to build a national crypto reserve funded by their own Bitcoin miners, Bitcoin Magazine writing. Kazakhstan has laid out a plan to build a national strategic crypto reserve fed by its Bitcoin miners, part of a two-step push by President Kassym-Jomart Tokayev to pull the country's large mining industry into a regulated, state-supervised system. A presidential decree signed July the 7th sets the frame, and a government resolution approved July the 18th supplies the mechanism. The government cleared the rules for the strategic digital mining under Government Resolution 638, published in the prg.kz legal database. Together, the two measures aim to route mining output and crypto trading through Kazakh infrastructure, with the state taking a share of mined coins for a sovereign reserve. The reserve sits at the center of all of this. Under the July 18th resolution, the Kazakhstan government created a program of strategic digital mining in which miners receive electricity quotas at capped tariffs on 10-year contracts from listed power producers. In exchange, they got to hand over part of what they mine. A formula set the transfer at 10% of mined digital assets after the cost of electricity and grid services paid each month to the state-linked Astana Hub Fund, which passes the coins to the National Investment Corporation of the National Bank for management inside a national strategic crypto reserve. The first approved power source is Ikabastu's GRES-1 coal plant with a 300 megawatt quota. To qualify, a miner must run a data center of at least 150 megawatts with rigs that each clear 150 terahashes per second, among other conditions. The resolution defines its reserves as a vehicle to invest in digital assets, in derivatives tied to those assets, and in the shares of companies they build or invest in crypto, rather than hold coins alone. The structure gives the state a spread of exposure to the sector it now seeks to grow, with the national bank's investment arm at the controls. The design turns Kazakhstan's cheap power and mining base into a channel for state accumulation, an approach that echoes the reserve strategies spreading among governments. Kazakhstan has floated a $1 billion crypto reserve built in part on seized assets and state-mined coins, and its central bank moved to invest up to $350 million in crypto-linked funds. And then they talk about the establishment of the United States Strategic Bitcoin Reserve, which, as we know, has done absolutely nothing so far. We'll see. Bitcoin mining pool Poolin files for Chapter 11 bankruptcy. Zoltan Vardai, Cointelegraph. Singapore-based Bitcoin mining pool Poolin and two of its U.S. affiliates filed for Chapter 11 in a New Jersey court on Wednesday. Poolin's court filing shows the mining pool operator has estimated liabilities of between $105 million and assets of $1 million to $10 million and 10,000 to 25,000 different creditors. Well, it's going to be a fun fight. Poolin and its affiliates are also seeking court approval to sell two West Texas mining sites to Thor CALAP under a proposed $52 million staking horse bid. Wait, hold on. What? Under a proposed $52 million stalking horse bid. The hell is a stalking horse bid? Hold on. What is a stalking? Stalking, like I stalk you. I'm stalking your wife. You know, I'm stalking you, right? That's the stalking horse bid is an initial pre-approved offer made by a chosen buyer for the assets of a distressed or bankrupt company. Okay, now it makes sense. Anyway, this includes $37 million for the Tarbush assets, including an assumed liabilities, and a $15 million for the peyote site, including the power rights, equipment, and all other assets. The sale would be subject to a court-supervised auction with a bid deadline of September the 8th. Poolin, if you don't remember, was once the world's largest Bitcoin mining pool, but that was back in 2019. It now ranks as the 17th largest mining pool operator by hash rate, with a 0.2% market share, according to Hash Rate Index. So, I mean, Poolin is a well-known name in the industry. It's sad to see it go, but honestly, they're one of the smallest miners now. They used to be one of the largest, or they used to be the largest, and they remained one of the largest for a long time, but, you know, things change. It just does. You can't do anything about it. So it's sad, but what I find interesting is that they want to sell the West Texas mining sites to Thor CALAP, or Thor Callip, I guess is how you pronounce that. But guess who else is out there in West Texas? And like they're building like 3 sites to the tune of $3.8 billion just northwest of my old town of Lubbock, Texas. That would be Galaxy Digital's Helios situations. So what I'm surprised is that they're not going to sell it to Galaxy Digital. In fact, I kind of have a gut feeling that there may be a bidding war between Thor Callip and Galaxy Digital. We'll have to see. We'll have to see. But Galaxy Digital was definitely not mentioned here. Sad to see, though. Bitcoin treasury companies. Oh, yay. Okay, so Bitcoin treasury companies sell up, repay debt, and pivot to AI as share price collapses. This is James Van Straten out of CoinDesk. Strategy pioneered the digital asset treasury in 2020, spurring a wave of publicly listed imitators who splurged their own cash and borrowed even more to buy Bitcoin. As the price climbed to a record in October 2025, they were all happy. But since then, Bitcoin has slumped about 50%, sending share prices tumbling and forcing many of the companies to reconsider their accumulation strategies. According to Van Eck head of digital asset research, Matthew Siegel, several companies have now exited crypto entirely or are reducing holdings substantially. Just this week, Satsuma Technology shareholders approved the liquidation of all 668 Bitcoin and the return of capital, as well as a delisting from the London Stock Exchange. Another LSE-listed firm, Smarter Web Company, sold 178 Bitcoin to repay a convertible debt instrument. Quote, when we entered into Smarter Convert in August of 2025, it provided an innovative alternative to traditional leverage, Smarter Web CEO Andrew Webley said in a statement. Quote, whilst we continue to recognize the potential benefits of both fiat and Bitcoin denominated convertible instruments, we do not currently believe they represent the right capital solution for the Smarter Web company. Okay. Among others, abandoning the treasury approach include Sequence Communications, which sold Bitcoin, disposing of nearly 80% of its remaining holdings to repay convertible debt. Nakamoto, whose shares have fallen 99% since its May 2025 SPAC deal, sold around 284 Bitcoin to raise $20 million in working capital, following its acquisition of BTC Inc. and UTXO Management. It also sold another 40 BTC received through its derivatives program, according to Van Eck Siegel. Almost 70% of its remaining 5,300 Bitcoin were pledged against a Kraken loan that matures this December. Oh, great. Creating what Siegel described as a potential binary event. It's not only specialist treasury companies that are reducing their holdings of the largest cryptocurrency. Crypto miners, including BitDeer and Mara Holdings, are selling Bitcoin to repurchase or repay debt and repurpose their energy supply deals and compute resources to power AI data centers. Other sellers include Empery Digital, which has reportedly sold almost half of its Bitcoin to finance buybacks and debt repayment. And Strategy, which has sold about 3,620 Bitcoin in recent weeks and authorized additional sales to support its own US dollar reserves. Strategy, which started the investment trend, remains the largest publicly listed holder of Bitcoin. Quote, we will probably sell some Bitcoin to fund a dividend just to inoculate the market, Saylor said. That's not a signal of broad-based exit plan. Beyond Bitcoin sales, management changes and corporate deals are also unraveling. Jack Mallers stepped down as CEO of 21 Capital, while Adam Back's Bitcoin Standard Treasury Company failed to complete its proposed merger due to unfavorable market conditions. Now, that sounds like I just read to you a big old slew of bad news. It's not. This is a nature is healing moment, and it's painful. But that pain will give way to itching. And then once the scab falls off, we'll be healed. But it takes time. We all got caught up in Michael Saylor coming to Bitcoin. I admit it. I got caught up in it. Summer of 2020. Yeehaw, bitches. That's what I was saying. I had no idea what it was actually going to become. The 840,000 Bitcoin behemoth standing in the middle of your living room, refusing to leave and pooping all over the place with its fucking synthetic derivative bullshit. Now, I didn't see that coming. I just didn't really see that particular thing coming, and none of us really did. But it is what it is. I still maintain my gut feeling at the top 3 to 5 Bitcoin treasury companies will most likely survive. The other ones, and I don't know how many there are total, they're all toast. Maybe there's some people that figure out that, hey, we better come up with a product for sale really quick, and they survive. But most of them, no, they're all gone. And it is a nature is healing moment. Saylor provided the knife and, slashed our calf, and now it's bleeding really bad, but it's starting to heal up. It's painful, and the wound looks pretty ugly, but eventually we'll be left with some scar tissue and a good story to tell our grandchildren. Where were you when Saylor damn near tried to, destroy everything by getting people into... Well, actually, he didn't try to destroy Bitcoin as much as he tried. He basically was the... If there was a lot of companies, these Bitcoin strategies companies were already on the ropes in the summer of 2020 when Michael Saylor came up. And by the time 2021, 2022 came around, when Michael Saylor had held his massive 5,000 seat, chief investment officer webinar for all these Fortune 500 companies on how to build your own Bitcoin treasury strategy. These people were already on the ropes, zombie companies. And they did exactly what the zombie companies in 2017, 2018, 2016 did. We're getting into Bitcoin mining. Remember Long Island Iced Tea Company? If you weren't around back then, that was one of the funniest moments I've ever experienced in Bitcoin, where a failing standalone iced tea company, they sold iced tea out of kiosks in public, like you were going to a Starbucks or something like that. They were failing hardcore. And then they announced they were getting into Bitcoin mining. And guess what? Their stock rocketed by 70%. I don't even know if the Long Island Iced Tea Company still exists. Hold on. Iced tea. Nope, I'm getting recipes. Hold on. Co. Let me put a co on the end. Long. Oh, now they've become Long Blockchain Corp. Oh my God. Long Blockchain Corporation, formerly known as Long Island Iced Tea Corporation, is an American corporation based in Farmingdale, Long Island, New York, wholly owned by Long Island Brand Beverages LLC, and ready-to-drink iced tea and lemonade products under the Long Island brand. I guess they're still alive. Their securities registration was revoked in 2021, though. See, that's the thing. They were already on the ropes. And then here comes, Bitcoin mining in 2017. Had already been there, but it really got in the news, and everybody that said that they were going to turn to Bitcoin mining got this massive boost in their stock price, and it saved them for a little while. But honestly, it was just a shot in the arm, and it goes away. And that's what happened with these small Bitcoin treasury companies. It worked for a little while. Maybe it allowed a couple of their head honchos to be able to have some kind of exit strategy. But after that, dude, there's no saving these companies. And we're going to have to go through that nature is healing moment. What really bugs me is this notion that one of these companies is coming up against a December deadline for when their debt instrumentation comes due. And that's what everybody did. They didn't spend their time. They didn't use the shot in the arm to come up with better marketing or, God forbid, an actual freaking product that people actually want to buy. And Michael Saylor's still not doing this. He'll still survive. Strategy will still probably survive all of this because they have so much. And Michael Saylor, well, a lot of people don't like him right now. He's still not stupid. I don't think he's the best. I don't think he's all that good for Bitcoin, but he's not stupid, right? So he's probably going to survive. But why isn't he using the time to build a product? A real product, not a synthetic derivative, not dead instrumentation like that has some kind of fancy name that people just buy so that he can take their money and buy more Bitcoin. He needs a product. He needs like new software to come out that does something that people want to pay for. I don't know, man. Maybe Mike should be one of the guys that gets into putting collars around cows so that he can tokenize them. Hell, at least that's a step in the right direction as far as getting a product that people would actually pay for. But he just doesn't seem to be interested in doing any of that. He seems more interested in sitting behind his computer with artificial intelligence trying to come up with new and fascinating ways to take people's money away from them. That's not how a business is built. It's definitely how a business dies, but it's not how a business is built. I can tell you that. As somebody who's built a business with a product that people want, well, actually a service that people wanted, we built synthetic DNA so that you could, if you had if you wanted to test out what a certain gene would do if you mutated a couple of base pairs, but you could never get a hold of that DNA in nature. All you had to do is say, okay, well, if the mutation is this and it occurs here on the chain, we'll take that sequence, we'll give it over to the guys at Certigen, which was the name of the company that I helped create. And we would take that sequence and we would just build the physical DNA out of it. It sounds like rocket science. I guarantee you it's not. It's kind of easily. Synthetic DNA construction is pretty easy. It sounds more fascinating than it is. Well, I'll tell you that much. And then we would ship them a purified sample of that DNA back to them, and they did whatever the hell they wanted. But that was a service people would pay for. We didn't have enough customers to get us through after the people decided to fly planes into the buildings in New York in 2001. But if that hadn't happened, we probably would have made it. It probably would have been okay. We had a service that people thought were valuable, and they paid for it. And it was revenue. It was real revenue. And we could actually pay ourselves and buy things, restock, enzymes and whatnot that we needed. But Saylor and the rest of these companies, none of these Bitcoin treasury companies are even remotely looking like they are trying to build something that people want to pay for. You can argue that, well, people also clearly want to pay for stretch and they want to pay for, strategy shares. I don't know. I'm not counting that. They need something they can put in a box that they can put on a store shelf that somebody sees and says, I need that. And then go to the counter and buy it. And none of these companies are doing that. That's what worries me the most. If all these companies were like, hey, we've got a new lease on life, let's figure out something that people want. And let's build it at a price we can afford and sell it at a price the customers who want it can also afford. Let's do that. And have a Bitcoin treasury strategy. Why not? That just makes sense. But you can't just sit on a pile of cash. All right, last up for today, it's not going to be very long. DeepSeek Liang Wenfeng held his investor meeting, and here's some of the points that somebody from DeepSeek he's not seen in public, like almost at all. And he certainly doesn't give very many 4-hour-long investor speeches. But some of the things that he said, and I'm just going to be basically nutshelling these for you, are kind of eye-opening. So one thing that he said is that he started DeepSeek with no intention of going public or maximizing profit. He believed that AI would benefit humanity. That's why he started DeepSeek. That's what he says. And we got to trust him here. The company is vision driven. He's not looking for key product elements or KPIs or key product indicators or whatever KPI stands for. There's different people. Some different people have different ways of saying it. And there's also no formal organizational structure for DeepSeek. He didn't even write down the vision of the company. He says it's embedded in the actions and the attitudes that his company has towards the world. He looks to Jack Welch's key lesson that a company's most important asset is its mission. Okay, well, Jack Welch was, he was a billionaire, and so he did know what he was talking about. I still think it's more, the mission better be product. It better be product. Anyway, but he also said about open source. All right, this is a Chinese guy and heading a Chinese company. And here's what he says about open source. It's a core belief for DeepSeek. It's not a forced move. And that AI is big enough, potentially 10% of global gross domestic product, that you cannot monopolize it. You have to share it. Open source doesn't hurt commercialization as long as you only take reasonable profit. That's another thing that he said. He also talks about open source models as being identical to those deployed internally with no weaker versions. What he's saying is that, look, man, if we've got an internal AI, we need to be able to release to the public a complete copy of that so that the public can use it too. He's also not worried about others deploying their models to compete. He says that the market is big enough. Open source is the sweet spot for a company of their size, DeepSeek. Startups too small, big companies are too bureaucratic. That's what he's saying about DeepSeek. And then he talks about some price and technology and AGI roadmap. He goes through competitive landscape. But the point that I want to make here is that we have a young Chinese guy heading up a younger Chinese artificial intelligence company, DeepSeek, inside one of the most authoritarian, totalitarian governments this planet has ever witnessed be birthed. And yet this guy is talking about, hey, everybody needs this. And things like take reasonable profit. And this is what the American or the United States and generally speaking, the Western AI companies that are producing the frontier models do not seem to understand. We've passed some kind of Rubicon. We've gone over some kind of point of no return. The world is changing. It's going to get better, but we've got to go through this dark time first. Some people call it the fourth turning. Whatever you want to call it. I don't want it to happen, but I see major bouts of violence within my lifetime, the likes of which I've never read about before in my life. I think that that's going to happen. I think there's going to be some kind of worldwide revolution. Multiple different citizenries representing multiple different countries directly in violent combat with their own governments and other authoritative figures. On the other side of all of this is going to be a better world. It really will be. We just got to get through this part of it. Some people will look at this time of their existence as like, God, I wish I wasn't here to see this. Well, like Gandalf told Frodo? So are all who live to see such times, Frodo. All we really need to do is figure out what to do with the time we have in it. But this guy doesn't seem to me to be representative of the authoritarian and totalitarian values that China's leadership seems to project. This guy seems more capitalistic, yet in a way that isn't, I want everything under, because like there's capitalism and then there's cronyism. Here in the United States and most of the West, we've long passed cronyism or long past capitalism and gone far enough into cronyism that it doesn't look like capitalism at all anymore. And yet the left, the blue hairs, the people that are freaking out about Orange Man being in office, they actually think it's capitalism. It isn't. This guy has more capitalistic tendencies that I'm used to than anybody I've ever seen in like the last 5 years. I mean, he's using the word, we've got to share it. He's using phrases like take a healthy profit and then, cut everybody a break. That's the way that capitalism used to work. We were able to monitor ourselves. We were able to put ourselves under some kind of constraint. Now it's like, fuck it, I want everything. That's how you get companies the size of AT&T and Microsoft and Apple and God forbid SpaceX, where they just do everything and there's no room for any competitors. Competition is good, although you will hear other people that are said to be self-styled capitalists say that competition is evil. And I can't remember exactly who said that. I'm sure somebody out there knows. It'll come to me later today. But this guy doesn't seem to be anything like what I was expecting. He's a guy I would want to sit down and have a beer with. But the last thing that I can say about all this is that for those of you that are still saying, I don't want to have anything to do with artificial intelligence, and then list a raft of reasons, you better figure out how to get over that shit. It doesn't mean use it for everything that you do, but you need to learn how to use it so that you know what you can do with it and what other people are doing with it. That's the only way to survive at this point. Does it mean that it's inherently good? No. Neither's a hammer. Neither's a pipe wrench. Neither is a saw or a screwdriver, whether Phillips or flathead. They're just tools. You can use them to stab somebody or beat their brains in, or you can build a house and plumb some water lines into it. Depends on what you want to do with the time you're given to live in these times. Final farewell to John C. Dvorak of the No Agenda Show, sir. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.